All right. So, the first question on the quiz that I want you to know, that I want you to understand, okay? For those of you joining us YouTube, live is always so much better. So we get to talk about like the school closing and stuff. I just spent a little bit of time talking about school closing. But if you can join us live, I'd love to have you come join live because then you can talk with me. But here is here's what I want you to. This is the last insurance lecture that I'm going to do. So we've done health insurance, we did auto insurance. Today we're going to do some life insurance. I'm going to show you a little bit about how life insurance works. But an overarching, here's the question I ask you on the quiz, okay? The question I ask you on the quiz is, what is the purpose of any type of insurance, okay? And I want to come back to, I've emphasized it, I'm going to keep emphasizing, but I want to come back to saying, okay, look, insurance is not going to prevent tragedies. Tragedy is going to, it's going to take place, okay? There will be tragic things that happen, okay? So there will be auto accidents, it's tragic, okay? There will be cancer and sickness and illness, it's tragic. There will be loss of life and death, it's tragic, okay? And so no amount of insurance is going to stop those tragedies from taking place, okay? But what happens is, insurance is, it says, okay, here's one tragedy, but let's not compound that tragedy by devastating somebody financially, okay? And so insurance is to take care of the financial loss that may be experienced from that tragedy, okay? So that's your first quiz question, okay? Now, the topic we're going to look at today is life insurance. So I want to apply that idea, that concept to life insurance, okay? They call it life insurance to keep a positive spin on it, but it's really death insurance. When you die, okay, that's a claim against the policy, and then a death benefit is going to be paid out to a beneficiary, is what they call it, okay? And so there's somebody that's going to be insured. So let's say that I'm insured. That means that my life, I have an insurance policy on my life. If I die, a death benefit, or they'll sometimes call it face amount, will go to a beneficiary. Now, who it goes to, it depends on who owns the policy. If I own the policy, I get to decide who it goes to. If somebody else, somebody else can own the policy. So my wife could own the policy, and if she decided that, I want the kids to get this money instead, she could change the beneficiary to the kids instead. And so that is kind of how it works, right? So now, what is the purpose of life insurance? Okay. Well, we said the tragedy of that financial loss, okay? So here's why life insurance is important. If I'm 35 years old, okay, and I've got 4 kids at home, and I'm working and I'm providing, a living for my family, and death occurs, okay, what happens to my paycheck? Okay, my paycheck is gone. Right? I no longer am going to be earning an income for my family. So that income for my family is jerked away. Okay? How does it get replaced? Well, that's why I have a life insurance policy. If you have a life insurance policy in place, it's to help to replace that income. Okay? So, in your notes, I want you to write this down. This is going to be a question that I'm going to put on the quiz, okay? It is, well, maybe. But how much insurance then? Well, generally your experts out there will recommend that you have 10 times what your annual income is, okay? So if I'm making $80,000 a year, I should have $800,000 of life insurance on my life, okay? If I'm making, $100,000 a year, I should have $1 million of life insurance on my life, okay? So, so then if death occurs, my family can at least live off of that principal for at least 10 years. But if they take that money and then invest it and put it somewhere, we don't want it going up and down. I would not recommend you take a life insurance policy or a life insurance benefit and put it in the stock market, because it's going to do this, okay? You put it in something that's going to be a stable 4 or 5%, okay? And then you can live off the interest and maybe some of the principal, and it will last you much longer than that 10-year period, okay? Down maybe to, 15 to 20 years now, okay? But if you continue to live that lifestyle, your kids aren't going to be left without that income, and so that's one of the main purposes why you have life insurance. Okay, now there are two different types of life insurance that we're gonna discuss. Okay, the first type of life insurance is term life insurance. Make sure you have these two in your notes. Okay. So term life insurance is the first type of life insurance that you need to know about. The second type is cash value, okay? So there's term life insurance and there's cash value life insurance, okay? Now, term life insurance is for a specified period of time, okay? So if you have a 20-year term life insurance policy, it's gonna last for 20 years, that policy, okay? If you pay premiums into that policy for 20 years and 20 years later you're still alive, dang, you rolled the dice, you lived, that's a good thing, okay? But if you die, a death benefit or a face amount is gonna be paid out to a beneficiary, okay? Within that term, okay? So if it's a 20-year term policy, it's going to be 20 years is how long that policy is going to last. If it's a 30-year term policy, that it's going to last for 30 years. Okay? So a term life insurance policy is for a specified period of time. Okay? Generally speaking, okay, and one of the questions on the quiz says, okay, what is the purpose of term life insurance? Generally speaking, during your peak earning years. Okay? And I would say that's going to be between the ages of 25, maybe 30, between the ages of 25 to like 55, maybe 60. Those are like your peak earning years, right? So if you have a 30-year term policy that goes from the age of 30 to the age of 60, that's when you're more than likely going to be raising kids. That's when you're more than likely entrenched in your job, in your career, in your business or whatever. And so, during that period of time, so the main purpose of term life insurance would be to replace income if death were to occur, okay? So I'm going to repeat that. The main purpose of life insurance, okay? And just so you live TikTokers know, help each other out with your comments again, because I'm not seeing you there. I'm kind of doing the camera and here, and you're turned this way so that when I display stuff, it'll read the right way. Okay, again, the main purpose of term life insurance is to replace income. Okay, so generally speaking, you have term life insurance for that period of time. Okay, now the other type of life insurance is cash value life insurance. Okay. Now, cash value, there's different types of cash value. There's a policy that they call whole life. It's a cash value policy. The name of it is whole life. Guess how long it lasts? Well, as long as you pay the premiums, it will last your whole life until you die. Okay? And whole life insurance or cash value life insurance, okay, there's other types of cash value life insurance like universal life insurance. There's variable universal life insurance. There's variable life insurance, okay? These are all different types of cash value policies, but all of these cash value policies will last your entire life. Some people will use life insurance as a retirement planning tool, okay? And it will be used to help supplement their retirement, okay? And then another reason why, another purpose, so that's one purpose of cash value life insurance is retirement planning, okay? But another purpose is what they call estate planning, okay? And I don't know if you guys remember this, when we talked about taxes, we talked about when you die, there's a death tax. They call it the estate tax, okay? Well, those taxes, if they come due, you know, if you got a large estate and you die and your family inherits that estate, if you don't have a life insurance policy in place, they might have to liquidate stuff to be able to pay the taxes. So I've used the example of Elvis, right? Elvis dies, right? And it's like he didn't have life insurance, and it's like, well, why didn't Elvis have? Well, probably because he was on drugs, and the insurance company probably wouldn't approve him for a policy because he was too high risk, right? But nonetheless, he dies. He has a large estate, passes it down to his family, and his family has this huge estate tax bill that comes due. And it's like they don't have the cash, so what do? They sell a whole bunch of Elvis paraphernalia, and that's why there's so much Elvis stuff out there, because his family sold a ton of it to get the money to pay the taxes, okay? So, one of the main purposes of cash value life insurance, okay, is the estate planning purposes, okay? All right, so what I want to do is I want to give you an idea of costs, all right? Our activity Friday, you know, when you're going to tune in again on Friday, I'll post it on YouTube. But on Friday, what I'm going to do is I'm going to show you a Google Sheet activity that I want you to do. And basically what you'll be doing is you'll be looking for health insurance quotes, auto insurance quotes, and life insurance quotes, okay? Now the only quotes we're going to look at today are term life insurance, okay? But the thing that I hopefully have illustrated to you guys is insurance is about risk, right? So I'm going to throw a few scenarios at you. I'm going to come around, I'm going to look at, see if there's any questions or comments I should be talking about here. So the you guys are hanging in there with me, okay? So hey, are people talking to Be Nice on there, right? Oh, there's some joker going in there. That's all right. Valena is helping us out again. I do appreciate that. Thank you for putting those definitions and those notes for people, helping people out. With life insurance, I'm going to throw a couple scenarios at you, okay? And I want you to tell me, just think in your mind, right? You don't have to answer, but what's going to happen to the premiums, okay? All right, so, and we're going to look at this, but if I am 35 years old and I don't smoke tobacco, and I have another person over here, 35 years old, and they smoke tobacco, who's going to pay a lower premium on their life insurance policy? The non-smoker, right? That should be obvious. Why? Because the insurance company is taking more risk by insuring the smoker, okay? And the statistics will bear that out. They look at data and they look at numbers, okay? If I'm a 35-year-old and I am 6'1" and I weigh 180 pounds versus a 35-year-old who is 6'1" and weighs 280 pounds, who's going to pay more? Yes, the 280-pounder is going to pay more. Why? Because the 280-pounder is overweight and they're a greater risk to the insurance company, okay? So, you know, they're looking at, so they're looking at the risk that they're taking. So when we talked about that term, the premium that you pay, If you're a smoker, your premiums are going to be higher. If you're a non-smoker, your premiums will be lower, okay? If you're overweight, your premiums are going to be higher. If you're fit, your premiums will be lower, okay? So there's, you know, the insurance company is looking at the level of risk that they are taking when they insure somebody, okay? If I get my, let's say we're going to look at 30-year term policies, okay? If I get my 30-year term policy when I'm 30 years old, that means that I'm going to be insured from 30 to 60 as long as I pay my premiums, right? Compare that to if I start at 40. If I started at 40, I would go 40 to 70, right? Which one's going to be cheaper? Well, obviously, the 30-year-old is going to be cheaper. So the premiums for a 30-year-old going and buying a life insurance policy is going to be cheaper than a 40-year-old who's going now to try to find a life insurance policy. Because the risk, well, you look at life expectancy, you look at the chances of dying at 65, 66, 67 compared to 55, 56, 57, okay? Your chances of dying at 65, 66 are greater than 55 or 56, okay? So you're looking at, the insurance companies are looking at the level of risk that they're going to be taking, all right? I'm going to go behind the computer, I'm going to display some things, and we're going to just look at some term life insurance quotes, okay? You got a fancy blue screen there right now, but that will be fixed in here shortly. Maybe. Okay, here we go. Have it up on my screen. It don't help you, does it? Sorry guys, let's see. I don't know, it's not why it's not reading to the computer right now. Now I think my projector, there we go. All right. All right, here we go. Sorry about that. It kind of looks green right now. It's warming up. We're getting there. We're going to get rid of this one. No, that's not what I wanted to do. That was the wrong button to push. Okay. All right, we're going to do, perfect. Here we go. Okay, so here is, it's eterm.com is the website that I'm at. I'm doing for the state of Utah. Okay, I'm going to do a $500,000 life insurance policy, okay? Now, we could go 20 years, we could go 25 years. I'm going to do a 30-year level term, and what that means is that if I choose a $500,000 life insurance policy, it's going to stay at $500,000 for those 30 years. So it's going to stay level at $500,000, okay? All right, now it's going to ask me my birth date, okay? I'm going to do a 30-year-old here, okay? So a 30-year-old would have been born in like 1990, so if we do like January 1st of 1990, that's going to be a 30-year-old, and we'll do a male for now. And just so you guys know, females, it's going to be less. Okay, why? Statistically, females live longer than males do. So, all right, now this is where it's going to get into some height and weight. They want to know. Okay, and I'm going to do this. I'm going to do my height and weight because, well, not exactly, but just what I know is going to be like a healthy. You know, a 180 pound, a 6'1", 180 pound person is going to be a fairly healthy person, okay, in terms of weight, okay. All right, so here's what we're doing. We're checking for term rates here, all right. So they're going to look at this policy. What they do, or what this website does, is they look at different companies. So this is Pacific Life, is a company I'm fairly familiar with. And so, oops, I didn't do Pacific Life. That I don't know what I clicked on there. But this is for a 30-year term policy, right? And so what they're saying is okay, with Banner Life Insurance Company. Okay, and this is the rating that they're giving you. And so what they're saying here is they're saying, hey, you are a healthy 30-year-old, okay? So preferred plus non-tobacco means that you're a healthy person, you don't smoke tobacco, okay? And this is a 30-year term policy. So in the state of Utah, $500,000 level, there's the birth date and the information we put in. There's our quote, okay? So for about $31 a month, okay, you will have $500,000 of life insurance coverage. If you're healthy, if you don't smoke, okay? So I'm going to change a few of these factors right here, okay? And so that you can see, you know, okay, if we do a smoker versus a non-smoker, how does that impact our rates? Well, let's see, okay? This is the best advertisement that I have right here for why you should not smoke tobacco, okay? It's not just expensive in the sense that it costs a lot of money for the tobacco itself, but if I use cigarettes, I'm going to say, all right, cigarette use, insert quote, it was $30 a month, and now it went to $114 a month. So for a life insurance policy for a 30-year-old, okay, the smoking habit doesn't just cost because of the cost of the cigarettes. Your life insurance policy went from like $31 a month to $114 a month. Guess what else is going to be more expensive if you smoke tobacco? Health insurance, okay? So your health insurance policy is going to be more expensive as well, okay? And so, you know, that's smoker versus non-smoker there, okay? Now, I'm going to do and when I do this, I have to play around with it a little bit because let's take that off. Oh wait, this is the one. We're going to take that off. We're going to say never used, and now we're going to do somebody who's overweight. So let's do a 250-pound man. And I want you to see what that does. Okay. And this is the same insurance company that we were looking at earlier. Why does it brought up Pacific Life? Because it was the cheapest. Okay. I'll be honest. That's a pretty good rate for an overweight guy. It would be interesting when you go through the process of applying for that policy. If we look at Banner Life is the company that we've been looking at. with all of the other quotes, right? And Banner Life is quoting us at $62 a month for that individual, okay? And I don't know why it won't let us click on that. Maybe I have to scroll down. But, so, did I? Yeah, never used in the tobacco. Okay, so, you know, if the guy's overweight and he smokes tobacco, it's going to be even more expensive. Okay, but these ratings right here are kind of what we're looking at, and they're saying, okay, when you apply for a life insurance policy, they're going to look at how healthy are you. Okay, you know, if you're an unhealthy person, and when you apply, just the questions I'll get from students a lot when it comes to life insurance is, are there people who will, yeah, there's all kinds of insurance fraud that people try to get away with, okay? Are there people who try to fake their death and collect on an insurance policy? Yeah, it's kind of stupid to do, but yeah, there's all, but when you know, could you say that you weigh this much when you apply? Well, generally speaking, when you apply for a life insurance policy, they're going to have you pee in a cup, they're going to take some blood, they're going to put you on a scale, they're going to measure how tall you are. They'll have, like, they call them parameds. It's a nurse that comes out and does a quick little physical on you, basically, and then they use that to underwrite and look at how much risk they feel like they're taking with your policy, okay? All right, now, I'm going through my mind right now, so I just wanted to give you an idea of different costs, you know, how much it costs to insure different types of people, okay? I didn't do male and female. Like I say, females are less expensive. Why? Because you live longer, statistically speaking, okay? Now, let's go to the questions on the quiz. I know I asked you what are the two types of life insurance. We said cash value and term. And then I asked you what's one of the main purposes of cash value life insurance. Estate planning, or or retirement planning. I would accept either one of those. What's the main purpose of like term life insurance? Well, it's to replace income during your peak earning years, okay, is the main purpose of that one. So that's life insurance. What questions? I'm going to go back to being on the other side here, and let's see if you guys have any questions.